Happy New Year's, family. Nordstrom is up like 20% in the last month, and I'm pretty excited about it. In today's video, I'm going to go through a quick Tre Score, not really quite as in-depth as I usually do. But before we do that, Merry Christmas, Happy New Year's from the Benevolent Investors team. We've had crazy snow. Check out the view here. When I'm not busy making trillions of dollars as a finance YouTuber, I'm sometimes busy shoveling just to keep my massive guns in shape. You know, the streets of downtown Japan are rough, so we gotta stay fit. Check it out. Here is the weekly stock chart. Nordstrom showing us precisely why it has a 2.4 beta. Check it out right up in here. We have a 30% plus drop after their earnings, which happened in November, actually. And so these aren't recent figures, really. In fact, we're closer to the next earnings coming out, I think, at the end of January. But I think that sell-off was oversold, overdone, and that's why I'm so excited about Nordstrom right now. If you've been watching the channel since 2020, you probably remember the moves I made with the stock where I more than doubled my money in like 2 months, which was both phenomenal and confusing. Check it out. We started buying in at 12 and 13 bucks in October of 2020, selling out at the peak of January 2021 for 38 bucks, almost a tripling, which was fantastic. But it's also one of those things that tends to get you a little bit cocky as an investor. So, you know, I don't take too much credit for that. And I think we might be kind of seeing something going on with Nordstrom right now. Let me get this straight right off the board. I'm not in love with Nordstrom as like a super long-term investment, like I am with a lot of these other stocks that I'm often talking about on the channel. You know, we've recently done SoFi, we've talked about Palantir, Desktop Metal, Tesla, these kinds of stocks. Nordstrom is more just like, what a bargain right now. And I feel like momentum is going to be taking us up over the coming few months, especially with earnings. So that's what we're going to get into. And similarly to a lot of those small cap stocks, what we see traditionally, and actually I think this has happened every single time interest rates are expected to be raised in the coming months, as we've seen with the Fed lately, what happens is people start to sell out of the micro caps and small caps, mid caps, and all of the money tends to go into the really large and mega cap stocks, which is precisely what we've been seeing these last few months as the Fed has been saying, hey, we're going to be tapering in 2022 and maybe into 2023. And so we've already seen a big sell-off in small cap and medium cap stocks. That damage I expect will spread up to the larger companies in the coming months. And that's basically what happens every time a cycle like this goes on. But the damage has already hit the small and medium caps, including to an exaggerated degree, I think, Nordstrom. So if you're not really familiar with Nordstrom real quick, it has a market cap of 3.8 billion, but a total enterprise value of 8.4 billion, which means it probably has massive debt, and that along with the lowered expectations for this year, compounded with the worldwide supply chain drama that's strangling just about everything retail, I think they've combined to kick Nordstrom's prices ass. Should also mention on that slide, the short interest is 13.8%, which is quite high. Normally, I'm not super alarmed if we see like 3, 5, maybe even 7 or 8%, but 13% is notable. And that means there are a lot of people who are thinking the price is going to keep going down and they're betting on it continuing to go down. But in the last month, we've seen just kind of like a steady march. And there are even a few days when it was like everything was red except Nordstrom. So going on to what makes Nordstrom really special is that before Amazon was a big thing and everybody was completely addicted and controlled by Amazon, Nordstrom was actually one of the biggest online retailers in the US because they put a lot of effort into their online presence as far back as 1998. And they were doing like online returns and free shipping before Amazon like even was a thing, really. They're mainly made up of Nordstrom and Nordstrom Rack. Nordstrom Rack is their kind of like more affordable option that competes with the likes of like Ross and stuff like that. A lot of their products, if they don't sell well in Nordstrom, they'll sell them on discount in Nordstrom Rack. But Nordstrom, the, you know, super premium retailer department store, is kind of their bread and butter. They do have a shrinking number of their premium outlets because of, you know, the pandemic and they're below 100 shops now. But 95% plus of those shops are in what they call Class A malls, which means really, really high sales per square foot. That's above $500 per square foot of sales. And traditionally what that means is that more affluent people who are less affected by, economic downturns like we saw during the pandemic, are going to be shopping at these kinds of malls, and therefore less mall closures, and also, more likely to maintain steady sales. Fortunately, we're through the worst part of the pandemic right now. But going on to Nordstrom Rack, they have about 250 shops right now, and those shops make up about a third of their total overall sales. Interestingly, one of the big emphases, and I'll get into this more in a minute, one of the big emphases of their website is that you can order whatever you want and have it shipped to whichever of the stores is closest to you. So if you're buying premium Nordstrom stuff, you can actually have it shipped to the Rack that's right down the street because they have way more Rack locations. 55% of Nordstrom sales come from online now, which is really, really good to see. It's been going up through the pandemic, and I think it will continue to go up. They're doing a really good job of leveraging all of their retail locations to speed up online shipping. So a lot of times if you order through the website, they'll just ship it from the local shop rather than a distribution center that's several states away or something like that. Or they'll also make it available for in-store pickup, which a lot of the other retail shops haven't really gotten their stuff together yet on this front yet. And finally, Nordstrom's superpower. This is like very few other retailers, if any, I think, probably none, can compete with Nordstrom's brand loyalty. They have really, really high loyalty club membership with 13 million members, generating 70% of their sales. So that means people who love Nordstrom's freaking love the crap out of Nordstrom's. And on top of that, I'll get into that more in a second, but the Nordstrom family, who started the whole thing, still owns 31% of the company. So we'll get more into management here in a minute, but what that means is that they know the vision and they're in this for the long haul. So they're not the kind of people who are like, how can we make our EPS numbers look good for this quarter to satisfy shareholders? They're very much like, we want to be building generational wealth with this thing, which I think is actually a sales point for stock ownership. Check it out. So going back to their loyalty, we see here that people who shop both Nordstrom and Nordstrom Rack and online spend 12 times more money than the average user. And then those who shop online and at either one of the stores are going to spend between 5 and 7 times more than the average shopper. And that really, really, really adds up. And that's Nordstrom's superpower. That's what I think most people miss out on when they compare Nordstrom to Macy's or Dollar General or Kohl's or whatever. So going back to our stock chart here, we have in early 2020, revenues more than halved from 4.4 billion down to 2 billion. And we saw after those figures were reported, the stock price got its face kicked inside out from $34 to $15. Similarly, on the other hand, in the most recent earnings, revenues didn't really drop. But we saw the stock price drop big time from $29 to $21. So let's take a deeper look into the financial statements and figure out what the deal is. So zooming in a bit more on the income statement, we have the most recently completed quarter, which is, again, not new news. We're going to have a new earnings report here shortly, but slight dip in sales right before the holiday season, and that ended up hitting our operating margins down here. We only hit 3.5%. And I think that was one of the big things that caused a sell-off. People were kind of like, dude, they're not growing. This sucks. I'm out of here. Apologies to those watching on mobile. These are really, really small figures for you to look at. But we see cash and cash equivalents dropping while inventories are piling up. This isn't necessarily a bad thing. And one of the problems with the whole supply chain crisis is that, like most companies, Nordstrom is ordering like more than they should be. But they're also starting to make new partnerships to try and sidestep some of the supply chain drama. And so it's hard to say whether that's a good thing or not. I think in this coming earnings report in 3 weeks here, I think we'll learn a little bit more about whether that's good or not. But we see here the current ratio at 0.92x and the quick ratio at only 0.19x. And so that's telling us here that the current liabilities, 4 billion, are higher than the current assets at 3.7 billion. And so I think that's not a good sign of financial strength. I think a lot of investors, especially institutional investors, are fleeing to stocks that have really, really strong balance sheets and high profitability, high growth. And retail is just not the place for that right now. And the cash flow statement shows a similar kind of sea of red. Cash from operations, negative 268 million, significantly down from the quarter before that. Now, interestingly, Omicron, all the news, all the figures are starting to come out now. And while we are starting to see a big dip in retail and in store, brick and mortar, everything, because people were like, another wave, everybody's going to die again. Oh my gosh, shut everything down. Omicron, as you probably already know, is not actually killing many people. Schools are staying open, and a lot of shops are just kind of like, let's just keep going. This isn't actually nearly as fatal as previous versions of Corona, like Delta. Schools are staying open, and they're expected to stay open. And retail actually not only was expected to have a really, really strong holiday season, which isn't reflected yet in these numbers, but it's expected to kind of get back up on its feet over 2022 and into 2023. Now, more specifically for Nordstrom, one of the really big projects they were working on, actually there were two really big projects, capital expenditure products that cost a lot of money over many, many years. One of them was their big flagship store in Manhattan, which is done now. It opened up in October of last year, like the worst timing ever probably. But the second one was bolstering their online offerings and shops. And those are done now. So I think capital expenditure, CAPEX, should be trending from about 6% of revenues down to about 4% of revenues. And they'll be able to, with that increased profitability, start paying off a lot of those obligations. Here's a CNBC article from early December talking about holiday sales on track to blow past record for spending, topping Retail Trade Group's biggest forecast. And I think that actually did end up playing out, which we can look forward to seeing in a few weeks on the next earnings report. Now, management has brought us through Omicron and COVID up until now, which you can't say for a lot of their retail competitors like Lord & Taylor, Neiman Marcus, and Barney's, like premium retail outlets who went out of business over the last couple of years. And that already is a really big testament to the solidity and trustworthiness and loyalty of Nordstrom and his clients. Now, management did issue a $675 million bond in 2021 to pay down some high interest, $600 million worth of high interest debt that they needed to use to get through Corona. And I think that's a shrewd move, and I think that's likely to bring down interest expenses by 10 or 15% this coming quarter. Here is their flagship store on Broadway that they finished in October. That was the result of lots and lots of CAPEX spending over the years. They're also making moves to reduce shipping times and have more products available across the country at their locations or distribution centers in the major metro hubs they're focusing on. Now, one of the really interesting things I see in the market is that we tend to classify stocks as like either tech or retail. If you think about Amazon, people are like tech. They don't think of it as like a retailer necessarily. And unfortunately for older companies like Nordstrom, they think of, when you think of Nordstrom, you think of retail, brick and mortar in the mall type thing. You don't think of it as an online, like rapidly growing presence, but it has that. And 55% of their sales come from online. And I think with a lot of their moves to speed up, like I showed on this slide, to speed up faster average shipping, to have many more products available, that's absolutely going to positively affect their growth going forward. And so getting into the management portion of the Tre Score, and remember, guys, the Tre Score isn't, it's just subjective, fun, silly, horsing around. But to get into the management score, we have a score of 8 out of 10. I think the management has actually done a really good job of bringing them through the rough last couple of years while making smart moves to not only pay down debt, but also become more appealing and capitalize on the loyalty that they already have. They've been working on partnerships like Fanatics and ASOS to boost profitability and also help sidestep the supply chain issues. And while these kinds of partnerships have only made up like 5% of their product selection in the past, they've said that they're looking to boost this up to as high as 30% going forward. So this could provide a broader appeal with less supply chain constraints, and that could end up really helping them step ahead of the competition. Here are a few more of the goals that they put forth in their report in November, and I think those will shine through in their upcoming report as well. And so I think those are some of the reasons we've seen the price drop so massively. But again, I think it's overdone. I'm just thinking that it just dropped a little bit too much, giving us an opportunity to get in because, the broader market doesn't really understand these strengths that Nordstrom has. Now we know Nordstrom's starting to get back on track to their 2019 sales levels, and their online sales are continuing to grow. And now at the current price, it's trading at just above 10x its projected 2022 earnings, which I think we'll see soon are growing faster than expected. Here is a chart I put together showing some of the competition. Probably Macy's is their closest competitor. Kohl's isn't quite as premium, and Ross is straight up like more of a competitor with Nordstrom Rack. But we have price to sales over the next 12 months, forward PE, EV EBITDA for the next 12 months, market cap, and revenues. So we see that Macy's has a much larger market cap, and it doesn't tend to get hit. It doesn't tend to get battered as hard as Nordstrom does when there are, crazy things going on in the broader market. But as I've highlighted here in the green, the price to sales over the next 12 months is really, I think, the biggest differentiator between the two. At only 0.25, it just feels like, Nordstrom is oversold. And again, I think a lot of this is just kind of like history and feeling and just, I can't prove all of these numbers to you like, oh my gosh, this is the deal of the century. But I feel like I want to give them an 8 out of 10 right now. And this is just subjective again, and most of the outlets, most of the resources you look around at online are going to say sell Nordstrom or just hold Nordstrom. Not a lot of them are saying buy. We do have some analysts who are really excited about it, and they're saying, it's going back up to $40 kind of thing. I'm not that optimistic, but I feel pretty excited about its current valuation. So I've been buying in starting at around $20. And I feel like Nordstrom's a little bit more memey, a little bit more meme stock potential than, Kohl's or Ross or Macy's or whatever. But I think I want to give it a meme ability score of 6 out of 10. It's no GameStop, it's no SoFi. It's not going to explode instantly. We've just seen it kind of making a slow and steady climb over the last couple of weeks. Growth potential as a business, I think, is quite limited. While they do have 13 million super loyal members who are going to be spending a lot of money, I don't think they're going to be growing to taking over whole huge other sectors of, the industry. And at only a $3 billion market cap, I think they're quite limited, especially with the debt load. It's not like they could just get a huge influx of investment and branch out into some new, arena. So I'm going to give them a 5 out of 10 for growth potential as far as the business goes. As far as share price goes, it has a lot of growth potential, but just because it's so undervalued. And then finally, since I live in Japan, the stock market is open while I sleep, and I love Sleep Score. This one is also a little bit tricky because we've seen them absolutely get wrecked in like one trading session. So I'm going to give them a 6 out of 10. It's not hyper volatile, but at the same time, over the last month, like I said, there have been many days when it's one of the few green stocks just because it's so oversold. And so again, this isn't the kind of stock I think I'm going to be holding forever. I just see that it's so oversold at the moment that I'm comfortable getting in now with 2 or 3% of my portfolio. And so when we throw it up on our Tre scoreboard, we get a 32 out of 50, which isn't, super duper exciting. And it's hard because this whole list is made up of mostly stocks that I'm like going to be buying and holding for 3 to 5 years. Whereas I feel like Nordstrom is just kind of like, hey, let's get in, let's ride it to 28, 30, 32, 34 bucks and get out. I think it has potential to go up to 40 bucks, especially as we go into 2023. But I feel like there's better places for my money in that next year. Like we talked about SoFi a couple of weeks ago. Pretty excited as a short-term opportunity. What are you guys going to be doing with it? Have you been buying in? Are you excited or are you scared? Let me know your thoughts. Love you guys. Talk to you down in the comments section and stay generous.